Well, hey there, how's it going, everyone? It's good to see ya. Hope you're having a good day, whatever you've been doing, or maybe it's nighttime, depending on when you're seeing this. But I just want to welcome you to the channel. If this is your first time here, my name's Jeff. This is the Animal Donut channel. And if you've been here before, it's great to see you again. A special thank you to Captain Private. You took the challenge yesterday. I'd asked if one of you guys would leave a little comment, tell me about yourself, anything, what you like to do with your time, what your hobbies are, what your job is, where you live, whatever. And it was real nice to hear from you, and I am so happy to hear that you have some four-legged friends as well. And actually today's video has something to do with my love of dogs and how this all fits into my life as an investor. So if this seems like it might be fun for you, I will tell you how dog walking, which I do every day. I've got a real good friend. He's got a husky, I've got a poodle, and we take these dogs for a really nice walk around the lakes and beautiful area in Seattle where we live. And during these walks, we talk about our friends, we talk about our families, of course we talk about our dogs, and we both love investing in the stock market, so we talk about that stuff. There could not be two more different people when it comes to investing, and I'm going to tell you how this comes through. So I'm a long-term investor. I pick stocks of companies that I understand, that I admire, that I want to invest in, that I have a deep intuitive sense that they make a lot of sense for me as an investor to buy these things and hold them for a while. And it's just based on doing some reading, doing some research, watching YouTube videos, listening to podcasts, just learning as much as I can. The heart of a company comes through when you spend enough time, when you learn enough about the company. I bought Berkshire Hathaway when I was so young, and it was just because I really admired Warren Buffett and what he did. I didn't even understand all the stuff going on at Berkshire, yet a long time ago I said, I want to buy this stock. That's an intuition. All right, so with my friend, when we walked together, he told me a couple months ago, like, you remember when the stock market was tanking, when it was like every day it was down a lot, and there were a lot of fears, tariff related, etc. And his impression was we are going into a recession. And what he told me as advice, you know, friendly advice, is that I probably shouldn't invest now. I should wait, at least this is what he's gonna do, is wait until the stock market bottoms, like when the recession gets bad, maybe later this year in June or July or August, and the market's really tanked. Then when prices are low, it might be a good idea to invest. And he said he'd actually wait, so like if the markets are crashing, he'll wait till they start to come up a little bit, you know, like it looks like good news, it looks like the worst has already happened, and then he'll get in. And so I started thinking about this a little. Now, I've been investing long enough, and I have a pretty strong rational approach. So when I make a plan to invest, I'm pretty good at sticking with it and not doubting myself. But I think that there are times when you sometimes talk to a friend or someone you trust, and they said, oh, I wouldn't do that. You know, you shouldn't be investing now. You're just going to be throwing your money away. It's just going to go down and down and down. And you start listening and thinking, maybe they're right and I'm wrong. It's not a good road to travel. It's not a good rabbit hole to dive into. So what I've done, and those of you who've been a part of this channel for a while know, is at the start of this year I picked 10 stocks, and I decided every month to invest same amount into each of the 10 stocks. This was easy to do in January when markets were up. Toward the end of February, around the 20th, 25th is when the stock market started going down. And February, March, April, very hard emotionally for some people to buy. And that's why we saw prices going down as people were selling, or they were just panic selling. So let me tell you, Sterling Infrastructure, that's the stock that I want to talk about today, because it is it's actually the best performer so far in my portfolio of 10. So here's what I want to share with you. My return of my investments, I've invested in December 31st. I've got the dates here. It doesn't really matter the dates. I've made about 5 investments so far, January through May. The total return on these investments in my portfolio has been 35.86%. That's of today, May 14th, 2025. Now, Sterling Infrastructure itself, and if you're following along at home, the stock ticker is STRL. The stock has returned 13.52% year to date, which is really good because the S&P 500 is about even for the year. Maybe it's negative slightly, but 13% is good for a stock's return this year. But my return is 35.86% in the portfolio, and I'm going to tell you why. So today, the stock, when I was just researching for this video, the stock price was $190.84, okay? But when I purchased shares, I started December 31st, 2024, and I was paying $170 a share. January 31st, I bought my shares for $142 a share. February 28th, I bought my shares for $127 a share. And then April 1st, April Fool's Day, I bought shares for $115.99. And so as you can see, shares in sterling, which are now 190, were down at 115 back on April 1st. And then on May 1st, which was just about 2 weeks ago, I bought my shares at $160 a share. So now with the shares up at 190, I've had appreciation on all of the shares that I've purchased. Every share I bought in this stock was at a cheaper price than it is now. And that is the power of compounding. So what I want to share with you guys, the kind of take-home message, is if you have something in your mind at the beginning of the year as your plan, and something that you can reasonably do and carry on, then I think, my own opinion, and not financial advice, is it really pays to stick with your plan and not be swayed by emotion, not be swayed by the news media, by people on YouTube peddling fear, not to be swayed by friends who say, you know what, I'm gonna wait. I think you should wait till we hit the bottom, because nobody knows what's gonna happen in markets. Anything can happen, and if you wait and try to pick the bottom, you'll probably miss it. Or as my friend is trying to pick when the stocks are gonna come back, it's probably gone, because I don't think he's bought anything. And his plan was to wait until this recession, which has not yet arrived, takes hold and prices get really, really low. So looking at the market, trying to prepare for the market crash, in my view, it never works for anybody, not consistently. They might get lucky and it happens once. Anyway, just wanted to share this with you because it's just part of my day-to-day life, is kind of hearing things, hearing the fear, hearing other people's opinions. And my sort of take-home message on this is ignore the noise. Just tune it out. Because most investors are not great investors. The average investor is exactly that. A lot of people lose money in markets. Some people gain money. But I think the sure path to making mistakes is to trying to predict what's going to happen, to try to time the market, and to either buy things because stock prices are going up and you're excited, or to sell things because you're freaking out because the markets are crashing. So far things have worked out really well. Sterling Infrastructure is one of 3 stocks in my portfolio whose returns are greater than 20% in my portfolio. Not that the stock price is up 20%, but that I was buying during months where the stock price was so low. So my returns in the portfolio are 20% or higher. So I continue investing every month into this portfolio, come through thick or thin, as they say, and especially through thin. It's the times when everybody is scared, when the prices are low and when there's a lot of doom and gloom. That's where you make money in markets. So don't be swayed by emotion, don't be fearful, and just stick to your plan. Thank you so much for watching. If you have not yet, just tap that like button. It would mean a lot to me. It helps keep YouTube aware that people are engaged with the video, that they're watching it. And if you like talk about stocks, especially growth stocks, small and mid-cap stocks, then this is a place to be, because I'm going to be talking about all 10 stocks in this portfolio that I'm running this year. And so far, I looked at it today, the overall portfolio's generated a 8% positive return. So this is probably the best that I have done in relation to the S&P 500, which I think is about flat so far as of May 14th, 2025. So I'm just sticking with the plan. I'm not doing anything exciting. I'm just sticking with the stocks that I've decided on, and I'm going to be adding to them every month, first of the month. So let me know what you think. I'm always interested to hear from you guys. And please follow Captain Private's lead and leave a little comment below. Just tell me something, a hobby of yours, something you like to do with your free time. Whether you like dogs, maybe you have a dog, tell me your doggie's name. Mine's Rosie. Thank you so much for watching, and I will see you in the next video.